Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, for the methodology in action, I have a new mystery chart this week. I'm going to take a break from reporting trades. We had one that stopped out at a profit, and the new mystery chart will go into those trades should it trigger. But I've got a lot of other stuff I want to cover this week, and we'll catch up on those trades soon. By the way, it's been taking me forever to get through those trades, and that's just because we've gone through this bear market and choppy markets, and it just hasn't been a whole lot of setups. So what I might do eventually is add in some other trades, because I think the whole series is supposed to be my next 100 trades, and in the meantime, I've made trades outside of the core methodology. So we'll stick to the core methodology for now, but then we'll probably go into some of this other trading. But I will show you some other trading that I'm doing, including crypto, which we're going to talk about quite a bit today. Now, it's not about the crypto. Trading is trading, and that's going to make a lot more sense in a few minutes. Before we get into all that, I want to talk a lot about greater fools. And if you're going to be a trader, this is really all you have to worry about, is to make sure there are greater fools. Housekeeping, I do take requests, and there's quite a few things I need to cover this week that were some mail-in stuff, so we'll get to that this week. And then if you want to send me your request, send them to davelandry.com/contact. It makes my job a lot easier knowing what I'm going to cover ahead of time. If you want the slides from this presentation and all the other presentations combined, go to davelandry.com/StockCharts. I think I'm about a week behind on this, but if you register now, you'll get the last 2 weeks plus every other set of slides that I've created for this series, which includes a lot of rules, as we're going to go through some of those in just a few minutes for the 230 EMA breakout system. I do still do a live webinar, and I have done this for probably 20-something years. But if you want to attend live, go to davelandry.com/live. I'm sorry, davelandry.com/webinar. You can ask your questions live, bring your favorite stock picks. We'll take a look at them. And we usually have a lot of fun with those. So feel free to join us. Would love to have you there. If you need to reach me on Twitter, @tfollowingmoron is my Twitter handle. Okay, let's talk about mystery charts and the methodology and action. We have one new mystery chart this week. As you can see, the entry was 3, protective stop at 215, IPT at 585. If you add those numbers up, those are pretty wide parameters given the price of the stock, and that's why I put risky on it. I think it has a historical volatility rating of like 118 or something like that. You can see big thrust from lows. If you were to put the bow tie moving averages in, which are available in my ACP plugin, you'll see that it's also a bow tie setup. And we had a fairly deep pullback. Entries here, stop is down here, and the IPT is actually a little bit off the charts, literally. Also, if you're into bigger picture technical analysis, you'll notice that there's a cup and handle pattern. I'm not a huge fan of big picture patterns as far as using them directly for trading, but if one of my setups sets up within them, he tried to say, then it helps to back the setup, and I'm a big fan of that. So I won't trade a head and shoulders or cup and handle, something like that, but I will trade some of my patterns off of those patterns. Hopefully that made sense. All right, it's not about the crypto. Now, I've showed this slide before, but by accident, I got on someone's mailing list, and they just kept poo-pooing Bitcoin and poo-pooing Bitcoin and poo-pooing Bitcoin. And then when Bitcoin finally did crack a while back, they were like, see, I told you so. But during that time, the market ran over 600%. Now, keep in mind that bubbles go much further and last much longer than most are willing to believe. They confuse the issue with facts. You can make a lot of money trading a bubble, or you can pontificate your brilliance so that someday you could say, I told you so. Now, what's interesting is I dug out some old emails, and I don't know how far my email program goes back, but I did find one from 2017 where this gentleman, and I would never pick on anyone directly, that's why I'm not saying his name, but he pointed out that it was a gigantic bubble, and then Bitcoin proceeded to run 400% from there. Now, it went sideways for a while, but then it eventually took off, and on a net basis went up over 1,500%. The point I made recently in one of my weekly webinars which again, davelandry.com/webinar if you want to join us. But the point I made recently is if you can't make money in a market that goes up 1,600%, then maybe you shouldn't be trading. Now, it was Keynes that once said markets can stay irrational a lot longer than you can stay solvent. So Bitcoin might be total BS, and maybe it is. But as a trader, I don't care. I only care about one thing, greater fools. Well, of course, making money. And the only way to make money is off the greater fool. Now, since the only way to make money trading is to capture a trend, your job, should you decide to accept it, as a trader is to buy things that are going up and sell things that are going down. Nothing more and nothing less. Now, there's only one way to make money trading. A greater fool must come along and buy the stock higher than where you bought it. And the only way to profit from a trade, that's any trade, is to capture a trend. Now, I've showed this before, but let's say you get into point A and you exit at point B, then B minus A obviously is your profit. Now, you could draw a line between A and B, and if B is higher than A, that's an uptrend and you made money. So, as I often preach, technical analysis leads the way. Now, you can't always just buy at B, although I do have an IPO pattern that does just that. In general, I like to trade pullbacks, as you probably know, patterns such as TKOs, bow ties, which is a bow tie type of pattern. I will show you a breakout pattern that I will trade. And in some cases, I will buy markets that are going straight up. And we'll get into that in just a few minutes. But if a market is going to go from A to C and B is somewhere in between, it's going to have to pass through B along the way. So again, as I preach, you can't always just buy at B, but you'd be much better off looking to buy at B than, of course, trying to catch a bottom. So if you think about it, the only way to profit, again, from a trade is for greater fools to come along. So in a sense, we are greater fool hunters. We want to get into markets that have some sort of euphoria, and we want the greater fools to come along and buy the shares from us. So there's only two questions that must be answered before placing the trade. Is there a greater fool? And I think the more important question is, am I the greater fool? Always assume that the guy on the other side of trade knows just as much or more than you. In fact, it's probably better thinking that he knows more than you before you go ahead and buy the stock from him. Now, here's something that's important to remember. The greater fool also believes in the greater fool. Otherwise, he wouldn't be buying the stock or looking to get rid of it. Now, we did get some letters, as I said, some requests. And someone was asking me quite a bit about the 230 EMA system. And he was asking me a little bit about it, and can I flesh it out a little, and where do I use it? And someone else asked me a similar question last week, and they wanted to know, when do I trade breakout strategies other than except for crypto? Now, keep in mind that crypto is a special situation now because most of these altcoins are just going straight up. And it's an unbelievable, great time to be alive as a trader. It's very reminiscent of 1999. I had a couple of, I think it was 2 nights ago, I had 2 or 3 of my crypto pairs hit the initial profit target. I had one go up over 50%, or 65%, I should say, overnight. It's since backed off a little bit, and I'll show you some of that in just 1 second. So I do want to get back into, or rehash, I should say, what I already covered last week in the weekend charts on breakouts. But I'm going to go through this pretty quickly, and you can go in and watch the weekend charts if you're interested. Now, more often than not, breakouts tend to fail unless you're in the right place at the right time. Before everybody had a computer sitting on their desk, it was a lot easier to trade breakouts. The market tended to break out and not look back for a while. Now, the turtles, not to take anything away from them, because what they did was pretty phenomenal, but they were in the right place at the right time, and that helped tremendously. And as I preach, I would never be schadenfreude, but not many, or I don't know of any actually, turtles. I think there might have been one or two, but I can't recall. But most of the turtles failed miserably after the program. And again, as a trader, we're never too far away from anarchy, so I would never be Schadenfreude, but it just kind of illustrates that they happen to be in the right place at the right time. Now, inefficient markets, especially doing great momentum runs, altcoins, for instance, now, and then stocks in 1999, can be worth trading. And we really seek out bubbles as traders. We should not shy away from them. You just have to have a chair for when the music stops. Now, one way that I do trade breakouts is intraday, but you have to be really, really careful with that. So sometimes what I'll do is I'll trade what's called a Russian doll. That's like a pattern within a pattern. So I might have a pullback on a daily chart and go in and look to trade the stock intraday. And you might not be able to wait long enough for the patterns to set up intraday. So you're kind of stuck trading the breakouts, but you have to be really careful in doing that just in case you get faked out a little bit. So ideally, again, you want to have big picture patterns behind you, and you want to watch for possible fake outs. Now, sometimes a market is in a rout when it's going straight one way. When that happens, you could just jump on board. And a lot of crypto has been in a rout lately, and we'll get to that. Buy at B, which I talk about often, which is an IPO pattern, is sort of breakout in nature, although sometimes it can be stealthy and not actually look like a breakout. And that's why sometimes it works really, really cool. Now, I did get some questions on Landry Light I want to cover real quick. And this gentleman was saying that his count was 3 with the 30 EMA, but my count was 2 on the weekly. And that's something that I spent a lot of time talking about. And I guessed that he had not set the parameters to EMA. This is a slightly newer feature. I asked about this a few months after the plugin was public, so it might not be widely known. So I want to show you that here. Just make sure you set this to the exact EMA that you're looking at in your price charts. So as you can see, there are only 2 bars of Landry Light there, bar 1 and bar 2 above the 30 EMA. And you can see 2 bars down below. So that's the problem. He had that set to simple. So whatever moving average you're using at the top, if you want to study the Landry Light for that, just lows greater than the moving average for uptrends and highs less than the moving average for downtrends. Just set that right here. Make sure it's set to EMA if you're using an EMA, or for something like the TFM 10% system, make sure it's set to simple because we're using a 50-week moving average for that. Okay, now the question was on the 230 EMA system, and I've talked about this quite a bit, but let me just go through the setup real quick. By the way, for those who are interested in this, how this got started, this was published in Stocks and Commodities in 1996. I'm dating myself here. It's my 25th anniversary today. It's like, geez, time flies. But in 1996, I wrote the article, and it was using a 20 EMA at that time. But since then, I've kind of fallen in love with the 30 EMA. I know you probably want to party with me. And all you're looking for is 2 bars of Landry Light. In other words, 2 lows above the EMA. And then you're going to enter above a 2-bar high with some wiggle room. Now, this is a breakout system, and you do occasionally get whipsaws, but to my surprise, a lot of times the market comes right back in before filling, and no capital gets put into harm's way. If you do trigger, you want to stop out of the 30 EMA. So if you squint your eyes and look closely here on GRT, this is a crypto, you have bar 1, bar 2, and then bar 1, bar 2, of Landry Light down below. Remember, this just counts the number of days of Landry Light. It does not count the magnitude. So you can see right here, it's 32 bars. It's been 32 bars since price has intersected the moving average. So once you get 2 bars above the moving average, 2 bars of Landry Light, look to enter above the high plus a little bit of wiggle room. So a buy on this would be right around there. Now, did I catch these wonderful breakouts in crypto? No, because I wasn't paying attention. Am I interviewing myself? Yes. But what I did do is, as they continued to break out, and when I saw the whole market overall, crypto market that is, going straight up, I began buying a lot of pairs that were just going straight up. And I'll flesh that out in just 1 second. Now, a good place to stop would be the 30 EMA for starters at least. And then you want to take partial profits along the way. And I'm going to talk about that too. For years, especially like at a cocktail party or a dinner party or something, people will ask me, what exactly do you do? And I try to go through this, or used to try to go through this painstaking way of explaining everything. And then after the dinner or whatever, my wife Marcy would say, why you got to be so weird? And it's like, well, I was just trying to explain the money management and psychology and all those stuff. And then one day, somebody asked me at dinner, what exactly do you do? And I could see Marcy's eyes already beginning to roll a little bit and glaze over. And I said, well, I just buy stuff that goes up and I sell stuff that goes down. And then she looked over at me and said, thank you. So I'm nothing but a trend following moron. And that's what you do when you're a trend following moron. Something that I wasn't very happy to be called back in the day, because it was it wasn't one of my peers even. It was somebody I really looked up to. And things went kind of south. But I begin to digress there. So that's a 2-drink minimum on that story. But I am writing about it, and I will talk about it. Now, this one right here, remember I just said buy things that go straight up. Only buy things that go straight up if the market is going straight up, okay? So I bought this one, you can see, at these nosebleed levels. Now, it is a little scary doing that, so you do have to have that aforementioned chair ready, and then you also need to put some money management in place. So we take a look at this FET, and let's go back to the 230 EMA system just for 1 second. Bar 1, bar 2, and bar 1, bar 2 down here. 2 bars of green, as you can see. Enter above the high, plus a little wiggle room. Now, remember earlier I said breakouts tend to fail. Well, that breakout failed, okay? But here's the good news. It did return back to the 30 EMA, as you can see it right here, okay? And then notice that the Landry light down below goes to 0. Remember, we're just counting the bars above or bars below. Anytime it intersects, it goes back to 0. It just helps to illustrate what's actually in the chart above. But you can see we have 2 bars of Landry light, so you want to enter above those 2 bars, okay, plus a little wiggle room. So a plausible buy would be right around where I have it here. And then again, use the 30 EMA as a place to stop. Now, I did not buy this market on that breakout. Again, I really wasn't paying that much attention to crypto at the time. But since I've just been sorting the pairs by relative strength, and that's something you can do in ACP, by the way, and buying the strongest ones for the most part, with a few caveats. And instead of doing some complex calculations and a lot of thinking, right now, since the market is moving so far so fast, I'm just using a 20% initial profit target, and then after that I bring my stop to break even. Now if we zoom it in, you can see I bought on this wide range bar higher, multiplied that times 1.20, again 20%, that gave me 48 cents, and then I flipped out half at that 48 cents. Now I am free rolling, barring some sort of disaster, but the fact that these markets trade 24 hours a day, if I put a stop in and break even, the worst I should do is break even. And now I have a chance on a possible longer term gain. I have a few, knock on wood, in my portfolio that are up a couple 100% so far. And again, knock on wood. Now, this kind of dovetails into the money management, and trading is all related. You start talking about money management, next thing you know, you're talking about psychology and statistics. You start talking about all that and its methodology. And it could be very cyclical in nature. The good news is if you get good at any one part of trading, you get better at all of those parts. And it's also recursive too, by the way. If you get better at stock picking, then you actually get better at stock picking. And I'll flesh that out in upcoming shows. I'm doing a lot of work on that. Anyway, since no one can predict the future, the secret sauce is taking partial profits just in case you're only partially right, and then loosening your stops on the remainder of the position to ride out longer term trends just in case you are right big. So if you were to trade pure long-term trends, your drawdown rates would be abysmal, and your accuracy would be horrible. You'd probably only be right about 23% of the time, and your drawdowns would be just ridiculously high. In fact, the turtles actually realized halfway through the program that they were on the cusp of blowing up because they were not adjusting for the potential risk of these longer term trends. But if you can get into a shorter term trend and then gradually work your way into that longer term trend through loosening the stops, once you get that initial profit target out, then you have the potential for big longer term gains. In fact, that's a secret sauce, and it's something I definitely want to drive the point home on. Is the secret to trading is establishing enough of those free positions. And in my intraday trading, which I try not to do too much of, but I probably do a little more than I should, I do the same exact thing. I'm taking partial profits. Let's say I put on 1,000 shares. I'll take off 500 shares when it hit that initial partial profit. Now, when I was showing the money management to Charlie Kirk at his traders retreat down in St. Lucia, he was kind enough to invite me down there to be the guest of honor, which was really nice and something I'm very proud of. That's why I mention it almost in every webinar. But anyway, he said, it's pretty cool what you're doing, and I like that. He dubbed it free rolling. So the idea is to get these free rolls, so to speak, just in case one of these pairs has a whole bunch of greater fools that decides to buy it much, much, much higher than you. So this was the one I was talking about earlier. It was up 65% when I woke up this morning, and it's only up 50% now. But that's much better than a poke in the eye. Some of the other ones in here I've been riding for a few weeks, and they were up a couple 100% or more, and that's a pretty cool thing. And some of them are just kind of getting started. This one's having a little trouble getting started, but it did hit the initial profit target. And again, worst case scenario, I stop out at a scratch. Well, that's all my time for today. If you have any questions, you can go to davelandry.com/contact. If you want the slides from this presentation and all the other presentations combined, you can go to davelandry.com/StockCharts. I want to thank everybody for watching, and may the trend be with you.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day.